Oh yeah, man, I could lose a few pounds for sure. And I'm working on it. Keto daily.
Night moves.
I should play some hoops. I've generally lost a lot of weight playing hoops.
Hoops and hockey, it's all you need, and a little squash.
Absolutely. The lower back still being a little degenerative.
Furnickety.
Play ping pong, Lee says. Ping pong, man, there's nothing more frustrating than playing a good friend, right? When you're young, that just dominates you in ping pong.
Or your 17-year-old son. Yeah.
It's just brutal, man. It is brutal. Just having to get points and then still losing no matter what. It is harsh.
It is a different game. I mean, like it's interesting because my kids don't play any racket sports really, and they're all good at ping pong, but they're good athletes. What are you gonna do?
Matt, let's talk spreads, or in fact, let's talk money line. Bears.
Bears.
My favorite part of all of it was Davey Portnoy just crying about how insulted he was that in the pregame that they said they were two teams trying to find their way, and he was like, that's no comparison. The Bears suck. He's got an out trade.
Well, the thing that got me too is like they were Susie and Booger and Steve Young, all those guys on the field, RG3 before the game. Did you catch any of the pregame?
I did not. I mean,
it was like a funeral atmosphere, right? It was like low fog. I'm like, ugh.
Oh, I'm so glad, by the way, that I didn't have to participate in a tailgate.
I mean, it looked horrible.
Just brutal. Just get me out of here.
But they were all like, now that gambling is legal, like everybody, that's all they talk about, right? So it's like watch. It gets a little old because, anyways. But they were like, 60% of the retail has got the Bears on the money line, and they were all laughing about it. I go, all right, just the fact that these pros are laughing about it, I'm jumping on. Like it's actually the opposite of what I typically would, but the way they represented it, were laughing about it, and I was just like, and I didn't see all the Davy Boy shit before the game too, so that would have just exasperated and made me probably double my $10 bet to 20. But
what did the money line pay?
I don't know. It was. I mean, they were 8.5 point underdog, so it was decent. It was probably like 170 or something like that.
Right on. Bears.
The Bears. But
defense wins championships.
I watched the first half and I couldn't watch the second half. It was painful. I left.
This from a Lions fan.
I don't watch the Lions. I told you, by the fourth game of every season, it's done. So that's been true again this year. I have nothing to say. There's nothing to say about it. They suck.
Nothing to say.
They suck.
All right,
Dan Campbell should be fired. He's already extended. He's lived longer than he should. He doesn't know what he's doing as a coach.
Matt, we're going to talk spreads, but before we get to spreads, let's talk some earnings. Why don't you bring up, we got Google, Microsoft, GMGE, UPS, you said already reported.
Yeah, UPS and GE already came, and UPS, they did, here's what's interesting. Like, again, I'm watching here in the hotel, the CEO this morning, and she's on, and man, she was a robot. Wow, was she a robot? And I was like, she could not stay off. She was on script, would not get off script, just saying the same taglines, buzz lines, whatever they're telling their salespeople to say, she's saying the same shit. And it was just like, oh, this is painful watching it. But what I took away from it, from listening to the talking heads, was okay, their earnings beat. They did beat. So, and that's the opposite of what FedEx was warning. But the reason they beat is they were able to raise prices. Their volume was significantly down. So at some point, volume does matter at some point. But right now, they were able to make up for their earnings debacles because of higher prices that they passed on to their customers. Now, does that mean the economy is strong? No, it doesn't. So it's kind of it just made me think more about, to your point, like we're not even close to getting bad news still. We're not even close. And everybody, you know, and again, I'm watching Downtown Always Wrong, Josh Brown on CNBC this morning, and he's always bullish and he's always wrong and he's blah, blah, blah. And he's so pompous and arrogant. Anyways, I'm watching these guys. I'm like, now I remember why I don't watch this stuff. But then they're all just saying this is the time to buy. The stock pickers market. It is going to be a stock pickers market. Not everything's going to float up. But they were arguing about Amazon, Microsoft, and all these. Microsoft is up today into the earnings, as is Amazon. I mean, the Nasdaq's up. What is it up? 2.5% again today. So everything's great. The SPOs are 38.62, 63. I mean, that's an all-time high. We've been calling for 39.50, 40.50. So we're only 100 points away. So you've already had a 10% move. Don't forget the low on October 13th. And remember, I said mid-month will be the low. October 13th was the low, 38.50 or 3,500 on the SPOs. And now we're already up to 38.60. So if you're just waking up, you missed the 10%. You missed the bulk of the rally. There's another 3 to 5% left in my estimation. And I think we're going to have to get a little sell-off before those come down. You know what I mean?
Right on. Well, our fearless leader is saying that gas is 350 or under 350 across the country, and everything is good. We're trending in the right direction.
Yeah, well, I paid. I don't know where he's looking, but I paid $5.60 yesterday. And
believe me, the first insult.
No. Excuse me. I paid $5.99. It's gotten more expensive.
Well, exactly, and it's going to just continue to get more expensive for you as you travel south and west.
That's correct. Well, I'm already west.
Forget about it. Did you see the zero hedge share of somebody buying the butterfly, the 200, 250?
I posted it in the room this morning.
Yeah, I saw that and then saw it again there. So there's some people at least, and again, we say this all the time. I don't care what you think. I don't care if you think he's the greatest. Somebody, on the other hand, is putting their money where their mouth is and betting on an explosive all-time high coming in crude in 2023. It was the Dees 2023 butterfly that was purchased, and somebody sold it, right? There's the other side of that bet that said, you are out of your mind. There's no chance it goes. They're yours. Yep. And we said that on the way in. Truth is really just what's here. What are you willing to put your money with? That's all that matters. Tell me what open your mouth with a bid or an offer so that I can respond to it. That's it.
And so Microsoft is up, $30 from the low. It was 218 again in that middle part of the month. So it's up $30, which is, it's close to 15%. That's a huge move. No matter what the earnings are, I don't know, it could travel up to 264, which is kind of the top of the profile. So that's possible. I'm not involved. So I don't know really what it means to the broader markets. I just, I think we got to get through this earnings again. And then we got then we'll have to wait until January for the next ones. But, again, kind of this end of the year save, it may be happening and it may be happening early. So don't expect it to go too far. I don't really see us getting over 40.50, which is only 200 points away. And we've already gone 350. So 360. Amazon, same thing, it bottomed at, or at least the recent bottom, 105-ish. And now is trading all the way up to 121. So again, another 15% move there, basically. And
I think the more interesting one, Matt, is Google. Bring up the Google chart because they report today and an ad-driven business.
Ad-driven business, but they also have so many other lines. And again,
sure.
and this has recovered nicely. The low, again, isn't it amazing how, we talk about this, but everything, the coordinated effort here on the middle of the month on the 13th happened. And yeah, this is up $8, which is, almost $13 again, 15%. You've already had 15% moves. Could travel up,
Bring it up. We don't see it.
Sorry about that, Bob. Could travel up to say 112 or so. That's the top of this profile on a multi-month. This is basically the last quarter that I like to look at here. So that's kind of what I see here. I don't see much changing.
Well, today's giant as they announced today. Again, it's a giant global company.
Right.
And as these giant companies go, I think the market, I don't know how the market can maintain its positive tone if this one gets schmeezed. My thought.
I don't expect any of these to get schmeezed. Listen, I've been watching, again, CNBC this morning. They're pumping Facebook all day, so it's up 5%, and their earnings are tomorrow. I mean, it's just something. It's again promoting advertising. It's whether it's CNBC selling advertising, Facebook, Google. It's all the same, right? So, and it's hard to get, for me. It's just hard to get too excited about what is going on with any of those names. There's nothing new. And they're not, it's all how they're going to react and kind of where we've been. And I think it's more of a reactionary environment right now than anything serious. So just don't get too enamored with this rally like we're going back to 2020, because that's not going to happen. And you have to be a trader in this market. And we could have 20% runs off the bottom, and a 20% run off this bottom of 3,500 takes you to 4,200. It's possible. It's definitely possible, but that's a good year. That's a damn good year if you get 20%.
Exactly.
So,
All right, Matt, let me share. We talked natural gas yesterday,
yes.
and I just wanted to,
share. And it's up again today.
Yeah, I wanted to share a couple things, and then we'll go to the spread chart. But this is from the CME Group's website, and this is the margins required for holding something overnight. Let's just be clear about that. You could get out at the close and then re-enter and not worry about the overnight margin. But if you were carrying it, and I just want you to pay attention to because I'm not 100% sure why these two are like this. But anyway, in general, 1,000, 1,200, 4,200 for synthetic spread. But then if you go to the outright, if we go to the outright, just natural gas futures. That's not it either. I thought it was more like 10,000. There we go. Natural gas futures. So let's just say the one that we were comparing to was a $4,000 overnight maintenance. To hold the futures 10,000. So it's more than double. And that's the same thing here, even more so, which I find amazing. Again, from the CME Group website on margins, and they're talking about spread margins here. Soybean futures margin $3,000, a corn futures margin $1,500. So you think that's a $4,500 margin, but since these two are traded as a pair a lot, the margin would be only $1,100, which I find incredible, because I think this spread is more dangerous than the outright, because if you're just holding one or the other,
right?
And let me just bring this up, and then we'll jump back to both of those calendar spreads. And that is, this was just released the other day, talking production and yields and things coming out of the USDA. Soybean production is going to decrease by 3%, but corn production down 8%, 2021. So I've talked about this spread before. I want to talk about it again, and I'm going to share it. And because I already have it up, I'm going to share the natural gas one first.
Sure.
All right, let me share that.
Yeah.
Because this spread, and then I want you to jump in on this spread too.
Yeah.
So an intercommodity calendar spread, this is the same commodity, natural gas. This is Feb, June. If you're long the spread, whatever you do to the front month is what you do to the spread. So Feb, June, long Feb, short June. And you see this thing is ping ponged now since March, from down here near par or $1 to $4 over Feb over June,
right.
As this thing has on the rallying sequences. So one way to play this thing, obviously, you're not going to get the same bang if crude or natural gas goes from $4 to $10, right? You're only going to go from $1 to $4 if it recaptures that high. But the margin required is much less. Obviously, the risk is much less, as I've just pointed that out. And it does look like it respected that bottom to me. I want you to bring it up on a profile basis. And for me, this is a daily, I need some time here to change the slope of these standard deviation lines before I'd really want to jump with both feet in on this. But kick me out and bring it up from a profile standpoint.
Sure, I can do that. And it's interesting, we were talking about this yesterday, and it's a much safer way, right, to kind of.
It's safer in two ways, and bring it up. We don't see it. It's safer in two ways. One, it's not going to move as far, and two, you have a much better margin application of funds to be involved with it.
Right. Yeah, and so this is the NGG 23 minus the M23. Okay, so you're basically selling the G, you're buying the front and selling the back all at once, right? And
yes.
And this is up considerably. I mean, it was just 2 days ago, it was $1.03, and today it's at $1.46. So, wow, again, if you time these moves right, and you can see there's been a number of these where you've gone from, $1.70 to 220. That's another 50, 30, 40% move. So these moves happen pretty regularly. And if you're good at short-term trading, this is so again, we're well below value. This is a 15-minute chart. We're looking at a couple months here, and just getting into value takes you somewhere up here to $1.60. So, and if we start getting there, then you start looking at the twos, 2.1, 2.20, right? And then you can go all the way up back up here to 3.30. If the whole gas contingent starts to wake up again. So it gets kind of interesting, I think, when you start looking at these things this way. And to your point, the margin situation is interesting also, right?
Absolutely. It makes it. And by the way, like everything else, it cuts both ways. I mean, because, it's like, oh, it's only a $4,000 margin. The other way is 10. And by the way, the micros are obviously are a tenth of that.
Right.
All right. So you're looking at a $400 margin for one. So you're like, wow, I'll put 20 of those on.
Right. Right.
And so believe me, I've been through this where the lower margin sometimes is a false panacea of risk, and you can put way too many on and get in trouble. I've done it. I've seen it done a number of times in the agricultural complex, where that spread margin becomes the kiss of death. And let me just circle back to it. The corn, soybean count, it's not a count. Well, it has a calendar component because they're not lined up exactly on the expiration. Seconds. It's going to be seconds now. I feel it. Seconds. There it is. And I will share. I said before when I brought this up, Matt, I liked selling the beans, buying the corn, as long as they didn't get back above 720. And I just think this thing, affirmed by the yields and the harvest that has just taken place, this thing drifts back down to that more normal $4 or $5 over beans over corn than where it's been in the last year or so, which is more like $6 to $8 over.
Okay.
It's my thought, and I'm sticking to it. That's what I'm thinking.
Again, all assets are one. Big earnings day, post market Tuesday, middle of the week, up big. Everything is up. Housing's up. I'm looking at all the different housing, 5-6%. I mean, it's nothing but a reactive market. It is a reactive market. And the one thing that kind of led us this morning, and we've been talking about it, is the bonds. And the bonds are up.
Yeah, bring up the bonds. We got to talk about them every day while it's just not 2-3 for fucking 4 hours as you sit on a bond desk.
Yeah, I mean it's really one of the more exciting markets out there right now. And if you're looking to trade, 117.19 is what the low that we saw yesterday. We're all the way up 3 handles on the ZB, which is again the 5-year notes. Those are up all the way here now, taking out the last 2 days of high. I remember we talked about this. Now you really got a story on your hand because you've taken out the last 2 days highs, right? Boom, boom. And now, so I would say pullbacks here back to, you got this 119 level is a key area, as you can see here on the profile. That if that were to come back, you could buy that again, I think. And this looks bullish to me. And again, way oversold. Forget about, and we got the Fed next week. So the Fed's coming up. It's in play. Again, all this is telegraphed. There's really not a lot of new information coming. We know they're going to raise most likely 3/4 of a point. So it's all in. Is the market, kind of thinking they're nearing kind of their end here, or are they going to, or are they going to continue? That's where we are.
Well, again, Matt, the market has decided. The Fed is late. The market activity, the what's here, which is what the ZB, the 30-year futures market, has already decided this.
Yep.
The Fed is behind. That's what they talk about, behind the curve. The free market is already established. And if the free market has found a bottom, the Fed will be behind the curve and they'll raise too far for sure. That's what they do.
Mm-hmm.
Anyway,
Mm-hmm.
that's what they do. Matt, I wanted to take a little look at the dollar. We've been dollar bulls for a while.
Yeah, but we also said, the market can't go down without the dollar going up. And, if you've been paying attention, the dollar has been going up or going down again for the last almost month. It kind of, has been a spinning top and today making new lows. So again, long term, if you've been long from 89, it's no big deal. Again, you're hoping to take some off. And I still think I still do think we're going to see, at some point, maybe next year, but a run maybe to those higher levels. And that's just what I think. Now, where would I buy? That's a whole different question. But let me bring that up just so you can see it on a longer term chart. But if we could get back to the spot that we broke out from, which is, right now somewhere around 105, I'd be looking to buy some again. Again, I peel off on these extreme moves anyway. So you got to peel off, and then this is extreme. I mean, 89 to 115, and things aren't getting better in Europe. They're not getting better in China. Still, they're maybe in some form of bottom, and we haven't even begun to sell off. Really. But again, I think that at some point, the bonds are really going to fail. The bonds are going to fail, and I think that's going to be it's not going to be. It's going to be bond driven. It's not going to be equity driven. But those bonds failing will force that money that's coming out of those bonds into equities, because the bonds are basically saying we don't trust any government, right? So when they fail, we don't trust your government, and that's from UK to Europe to China, now coming to the US. So when that happens, I do think there'll be a rush to equities, even though it's not a valuation story. It's just, where do I put my money story. And again, I wouldn't be surprised to see equities, including the S&P at some point next year, 23, 24, hit a new high. And it will have nothing to do with it's a good investment. It's just money's going to be chasing it because there's nowhere else to go on the planet. I mean, that's what it's going to come down to. It's going to be the last straw man standing. And until he's shaken out, it's going to continue that way, Bob.
All right, let me share the DX from a weekly and a standard deviation modeling, because I think this is interesting. This is full parabolic. But I do like this. I do like these a couple of areas on this pullback. You said 105. I think it's going to be actually higher before it gets there. The real test will be somewhere around 108, 108 and a half to see whether they're going to break this dollar longer term, or whether this is a pullback that is going to be a great buying opportunity on its way to 120. That's what the weekly's telling me, and we haven't been below the weekly average since early 2022. We had it here, but we never were there long enough, and never really made lower lows to affect the slope. I mean, it's been all the way back to 2021, and really since the market had a sell-off was 2020, where these slopes got affected. You're not going to affect the slope in a week or in a month here. It's going to take several weeks, maybe a couple of months, for this thing to really change its tone. I think it's, we could for sure pull back to that 108 level, but I think it's going to resume and will continue and make new highs by the end of the year. That's what I'm saying.
Yeah.
I think this is a long
by the end of the year. I don't know if it'll happen that soon. I mean, I'm open to it. And I'm long-term long, but I would rather see a little pullback here continue. But again, I think that kind of goes with how high the SPOs go. If they go to 39.50 for 4,000, maybe then the dollar's down here at 105, 106. I don't know. Again, I'd like to see how those kind of line up. You know what I mean?
I do.
Yeah,
I do. And the bonds too, it's interesting to see if this is if we can keep this area as a low over the next several weeks, because it takes time. It's like, the longer time frame, it's like you can turn around your fiat. A fiat's a short time frame. When you got a 18-wheeler big rig, it takes longer to turn that thing around.
indeed.
And that's kind of the analogy I make with markets. Like the longer time frame, it's an 87-point turn to turn that semi around, when the fiat can just spin like that on the 2-minute chart. Who gives a shit?
Right. Absolutely right. Yeah, it's again, the 2-year right now 4.47. So let's come off a little. Again, we've talked about that a little bit here, and that inversion is tightening. That continues to happen also. So let's see, the 2 years 447, the 5 years 420, and the 10 is at 409. Let's call it. They're all down a little bit today. 10 years down 3.5%. So that's down pretty big. 2 years not down as much, only down about 0.75%. So again, very quiet day, very light volume earnings. We gapped up and ran, but the follow through really since lunch started, we've been selling off. I mean, we're off not much. We're off what we got off about 70, 80 points on the NASDAQ, and sold off almost 20 on the SPOs here, 64 to 44 area, 45 area. But still very bullish on the intraday chart. But we're getting to that point. Like if we get below, say, 610 on the NASDAQ here, into or after earnings, that thing could whoosh down 100 points quickly. So I'd be aware of that. Just if you're planning a trade, this is how you plan trades, right? This is what you do when the markets are quiet. And it's kind of the same thing on the SPOs. If they're able to get under 35, you might want to press there and have some sell stop orders below these levels. And then again, 610 or so, called 600 for posterity on the NASDAQ. But if these you put in all this time trading above those levels and then you get under them, all those people have to get out, right? And that's all it is. And that's what the profile tells you. The profile just tells you that these areas now are this is getting to be a traditionally bearish setup on the intraday, but the 2-day takes you back to point of control, which is 470. So, maybe now's not the time to chase into earnings. Now, maybe you're thinking, hey, I'd like to buy back if we dip back to 11,370, and then on the SPOs, kind of the same thing. It's like, if you've missed a big chunk of this rally, where do you want to buy? Well, for me, there's a couple different levels here, but again, kind of, all the way down to 3,700, still solid. So if you can get a pullback, and this is where two-way trading maybe comes in. Maybe these earnings are not received, or maybe it's the exhaustion. The market has already run itself into these earnings because everything has been so positive and all stocks are up. How much is left, just because these earnings happen to be coming today, tomorrow? How much is left in it? That's the only question. And there could be a lot. And again, we could be going to 39.50 by tomorrow. I mean, it could happen very very quickly. So where these levels are, both above and below. And for the multi, like maybe a couple week time frame trader, which is what I like to do. I mean, I was buying down to that 3,500 level. Now I've gone to, I've taken off good 70% of my trades, and I'm now just waiting for kind of the next move. Either sell 39.50 to 4,100. Sell that block up in there with different option spreads, or you just kind of wait for the intraday opportunities if they present themselves. Right now, it's pretty quiet out there. It's really quiet out there.
All right, Matt, let me share some fun. Double Wide, our friend Double Wide shared this, big Houston Astros fan, so he's going to be busy over the weekend. World Series starting Friday. First of all, baseball, basketball is really the only sport where you just don't have a wide range of body types. Everybody's just a fucking giant on the NBA floor.
It's true.
Yeah, there's no Spud Webb anymore.
Well, there's Steph Curry's, but there's not a lot of them.
Well, Steph is still 6'1" or 2", isn't he?
Yeah, but that's small in the NBA, right? I mean, versus the 7-foot guards. I mean, that's all. I mean, everybody's a guard in the NBA anymore. You got to be able to shoot the three from half court, otherwise you dump along in the court.
Altuve saying to Aaron Judge, can you water my plants next week? I'll be busy. And Aaron's such a nice guy, he probably will. He'll probably, not a problem.
He's like, I'll go buy my wife a new diamond and then I'll come let your dog out.
Matt,
I did hit 63 home runs and the ball wasn't juiced and I wasn't juiced. I'm just a large man. See, he could be a point guard on an NBA floor too.
Yes, exactly. I'm at the UK, firmly establishing the World Economic Forum at 10 Downing Street. I find that interesting. The world of a central bank digital currency is a very frightening world as far as I'm concerned. We do not need centralization. We need decentralization everywhere. And that is the great fight of our time. And God forbid if that happens. And the UK is close.
Well, do you want to talk about, his wife and
the greatest thing that I saw was that they're way richer than the royals. Yeah, that's what they said. They said that.
I guess as the royals, you got to
spread Charles
you got to spread the money around to Jeannie and all these other marginal princesses who don't do shit except for put on nice clothes. They're an expense, right? They don't bring in none of them bring in any revenues. So
fantastic. I mean, the queen, when she was involved in horse racing and studding, she actually did make some money.
Is that in fact true?
Yeah. That is a fact, Jack. Yeah. Anyway. Yeah, central bank digital currencies.
Well, but his wife is involved with this Infosys, which we've talked about before. And this thing, by the way, is still hanging in there. Like, this is not giving up the ghost. So the WEF shareholders that are pushing the CDC, central digital bank currency, that's what this company is supposedly involved in. Now, back in 2000, they were also involved in everything, and then they were involved in Bitcoin, and then they were involved, so this thing is, and this company, by the way, has been charged with all kinds of crazy shit for, bad employee relations. I mean, they're not good to their employees. So there's all kinds of stories there, pretty much taskmaster slave type environments to work for Infosys. But this company, I mean, if the World Economic Forum fails, which I think it will ultimately, this thing, you talk about it has such a great fall to come, but it's dangerous. It's very illiquid. I mean, it trades 4 million shares a day, pays it's worth 6.4 trillion. It's just crazy to me. 6.4 trillion. Do you realize that?
No, I had no idea. Well, I knew the guy was the founder and owner.
Yeah, but look at this. Apple is 2.4 trillion. And according to TradingView, Infosys is 6.3 trillion. Now, I don't know if that's in rupees. I don't know, because Indian based. I don't know. I'm just
no, exactly.
But I've never had somebody say this is the wealthiest company in the world. But it is, if in fact that's dollars. It's 3x Apple. Boggling, Bob. But if they were to push their agenda, it makes sense. But I don't think that agenda will get pushed. Is all I'm trying to say.
Well, they're going to try to push it for sure. Well, the pushback from free peoples that don't want to be told how they can spend their hard-earned money,
right?
Is the great question of our time.
Correct.
The great question of our time. You know what you could spend some money on is head over to Amazon.com and buy some Manja Shrimp Mojo. All right, for goodness sakes, and do yourself a favor, cook someone a meal. Matt, still in hiding on secret probation. The light's much better there now for you today. I got sunlight. We got sun today.
I mean, it's sunny out here. It's partly sunny, not as sunny as yesterday. Seasons are changing.
how fun was it to watch a sporting event in a sports book with people invested? Again, it's a different energy because most of those people have some money on it. It doesn't matter how much they got.
And you don't know
$10
what
or
you don't know.
10,000.
It's just like the pit days, right? I mean, it's just like, it's interesting because I mean, I had my $10 on the Bear money line. I told you, how I placed my bet, and I did it on my app, not at the sports book. But then I was like, all right, I worked out and lifted here at the gym. I took a little hot tub, and I'm like, all right, it's 5:00. I'm gonna go over to this sports book, and it was just close by, and it turned out to be a really nice one. It was smoke free, which was great for me because I can't stand the smoky casinos, anyways. But the casino itself was smoking, but and I love. And by the way, you have to go through the casino to get to the book usually. But the book was near an exit, turned out, so that was good. But the women smoking and the men smoking with the mask on was pretty intimidating. Still. I mean, I can't believe the shit that you see in the world.
I'm worried about COVID, but I'm going to just smoke a pack of these lung darts. And hit the one-armed bandit for 4 hours.
It is absolutely shocking watching.
That is so great. That is so great. Let me, speaking of that, let's just talk a little bit about health. And let me see if I can find it because it is so great. There's a couple of my tweets and replies that I have got to share. There it is. All right. Because there is not a national conversation about health. We've talked about this, and this JB Simons Bart, this guy, he keeps trolling on Bill Gates. He says we are both men of the same age, 67 years old. We just approach health in two very different ways. Look at these two guys, Matt. Matt, pay attention here. You're not paying attention.
Paying attention. I see the pair.
Bill Gates body by what? Pear?
Body by slime, because he likes Beyond Meat.
And JB
but he's a big Coke. He drinks Coca-Cola too. So he and Warren Buffett, when he was the investor mode, trying to be the nice Bill Gates. What was that all about? Why did and how come Warren, you never see Warren with Bill Gates anymore? Never ever. Like, what happened to that?
Bill's got a sack of doorknobs around his waist, and JB is shredded.
Sack of doorknobs.
Let me come back up here though, because there's some other good stuff here. Of course, the Michigan punt, that was great. I loved seeing that. This was Davey Portnoy, emergency press conference. The Patriots suck. Even better was this picture post Bears thumping. A career NFL record without Tom Brady, 74-82. I'm not sure if you knew that. He also is begging for $1 there on the street corner with that look.
Does he have a
change? I thought this was interesting.
Cashmere sports coat,
like Chinese youths, full battle regalia and AKs. Meanwhile, in China, we're worried about pink hair and that you call me Jeffrey the Zebra. They're getting ready.
They're just getting ready. Well, first of all, the first step was the bouncing balls, and then that's kindergarten.
Bouncing ball, right?
And then first grade, you give them an AK. First grade, you give them an AK, and then they go out into the woods and start to see what they can do there.
I just lost audio.
I was just saying that first it starts with the bouncing balls and coordination.
Yes.
Second grade, they go out into the wild with loaded AK-47. Fourth grade is a whole different thing. It's AI.
Right. In other words, we're fucked. You should start learning Mandarin right now.
In other words, public education in this country has never been in good shape, and it's never been worse than it is today.
That's what we got. Hey, please visit us at marketvitals.io. Please share, retweet, and plagiarize far and wide. Everything you saw on Market Vitals is guaranteed, probably. And visit the CME website if you want to know about the margin benefit of trading spreads. And I think that's what we got.
Yeah, so just
Amazon.com.
but also make it clear, just because you have a margin benefit doesn't mean you quadruple your size.
No, it does. That's exactly what it means.
Right.
You 10x your size because you halved your margin. That's right there.
Don't do that. That's not what we're recommending.
That's right there in the HFR traders. It's a spread. How bad could it be? Another one of the great
It
traders.
just went up 50%. You were selling it at the bottom. It just went up 50%.
Come on, this is easy. This is easy math. You give me a 40% break in margin, I trade 10 times bigger. Thank you.
Mm-hmm.
All right. Again, guaranteed probably. Thank you, Matt. Thank you, Lee. And we'll be back tomorrow for another segment of Market Vitals. Thanks,
All right,
Doc.
baby.